I'm recording this video. It's Saturday, 1st of October 2011. I hope you're enjoying your weekend. Put out a video on Friday, kind of midway through the trading day after I'd finished my day trades, and thought I wouldn't be putting up another video on the weekend. Thought I'd enjoy the sunshine and kind of get out and about a bit. But then at the end of the day, I was going through my charts and I thought, oh dear, that's not good, that's not looking right. And so I think I owe you a little bit of a video just going through some of my charts. If you're feeling kind of video overload from me, I do apologize for that. Just switch me off, tell me to go away, unsubscribe or whatever. But I'll run through some of these charts because I think we're at an incredibly important break point. After a horrible kind of quarter, all the quarterly numbers kind of came out. I think the S&P index is down about 13% on the quarter. The top to bottom move's been just under a fraction under 20% from the Bin Laden high down to here. But here we go. So we sold off into the dying minutes of Friday's activity, and over the last quite a while I've been talking about these incredibly important kind of congestion zones here. We've got these falling and rising trend lines, 1200 on the upside and 1120 on the downside, and we closed at 1126, hit about 1122 I think on Friday's low here, and we're just inches away from this breaking through this. And if we break through this, the target on the downside's around 1,000. And I just don't see a lot of kind of good news in charts, and I think Sunday night will be the absolute key, because I'm not alone. I think everybody, all the technicians, everybody's looking at this and saying this is a bear flag, and we have a very strong possibility of breaking through here at 1100 and kind of continue on down. So Sunday evening, if we can rescue it, I mean, there are a couple of scenarios. I suppose we could poke through here and all of a sudden the pros kind of say it's an absolute bargain here at 1100. I'll step in, and then we kind of shoot off to the upside, or just everybody kind of gives up the ghost and just falls through the floor. In terms of volume on Friday, 2.6 million contracts traded, a little bit above average. This is the important kind of bar. It's a high churn bar that we got a week ago, and it's kind of been the place where we kind of tested back into the lows of the waterfall kind of sell-off. Huge churn bar, so relatively low range, relatively high volume, and so that represents professionals buying in to those lows. Similar to this high churn bar that we had, professionals selling out up here at the kind of 1220s, selling out at that point there. And so we're within this kind of bounded range, and we're coming back down to test it, and so they need to hold it this time. In terms of patterns, the last few days it's been this kind of sequence of stopping volume patterns. We got another one on Friday. These are stopping starred volume patterns, which are kind of a little bit special. They're quite strong in terms of the activity, and then a stopping volume pattern. Normally you get those kind of patterns kind of as a move kind of continues down, and it just shows a place where people are taking profits. It's not the end of a move, but it's somewhere where people step in to take profits. And to have it here as we're kind of coming very close to the cyclical support level on beta sine wave on this daily chart, shows that there's a little bit of people kind of stepping in. So there's a possibility that we could bounce from here, but we have to bounce straight away, because if we start to drop through here, that's really bad news. Well, it's bad news if you're a mutual fund investor long only. Nasdaq, a little slightly different pattern here. This, we've kind of fallen into a pullback to end of trend, and this is second cyclical turn after end of trend, which I kind of think is an important kind of trend changing place. But look at this, we're kind of falling through that on the Nasdaq, and again you had these kind of stopping volume starred patterns here and this stopping volume here, and so we're in this tight congestion zone, and we've spent quite a lot of time in here, so we're going to be moving into some kind of trend move. In terms of momentum, this would suggest maybe we're going to hold at this point here on a daily chart at ES continuous. So this is a day and night session. Here's the extreme exhaustion selling that goes on. We put in a bullish divergence pattern. We kind of hold here, come back, test a couple of times, and a flush kind of at the end of last week, kind of holding it, and that's that kind of high volume churn bar there. The same thing here, flush patterns suggesting that's kind of flushing out the last of those sellers. And I suppose we've had a little kind of a bearish divergence pattern here. We could just hold in this kind of zone between 1120 and 1100. It's a possibility that would suggest there. but we're under X trend, better X trend here, and we've kind of keep on rallying back up into this with these kind of little sequence of red bars kind of rallying volume, exhaustion, kind of buying volume, and then just getting rejected underneath this kind of trailing stop. And last time around at the beginning of the week we kind of rallied into there, kind of got rejected, and we're coming back down. Here's another chart on average trade size as well. Again, I don't post this up very frequently, but just on a 135-minute chart, I mentioned this a couple of days ago that recently these blue bars are high average trade size, which tends to suggest the professionals are active at those points. And the last kind of series that we've seen have all been at these highs here, just marking these high points. So anytime we rally into here, the professionals are stepping in and taking profits. Don't be put off by the huge number of yellow bars, which are kind of amateur bars. You tend to get that in kind of waterfall sell-offs like this. But what we've not seen yet is any blue professional bars kind of buying breakouts or stepping in at the lows. If we go back last kind of time we came around here, you can see this was an absolute key blue professional bar kind of stepping in there, getting this move going. They'd had a little bit of profit taking, but then they saw a bottom was being formed, and they kind of stepped in to see that. So if we see any kind of that kind of activity Monday, Tuesday, then this thing potentially could hold. But this so far just shows that the professionals, what they've been doing is taking profits at these rally points. On the hypothesis chart, again, I haven't changed a bar of these hypothesis kind of trend lines, just adjusted for when we had rollover here in this last kind of sequence. I was expecting a 10% correction, and that's why I put this low here. In fact, what we got was a 20% correction, and then I thought we would, after a 10% rally back, to make kind of higher highs on my kind of forecasts, hypothesis kind of chart, to flush people out, and then we'd turn down. But what we got, so we got the 20% down. The rally back was extremely weak, just rallying back kind of 50% of this kind of move. And now here we go. This is kind of around the time today, last couple of days, where I thought we would get a turning point in terms of that hypothesis. So we've had the upswing in energy holding this move, and now we're starting to move in this kind of downswing of energy. In terms of the long-term tick bar charts, 40,500 tick bar chart. So this is the rally that we got that marked the high, exhaustion buying, end of trend. Finally, a little bearish divergence signal. We kind of roll over now. With the end of Friday's activity, there was quite a lot of blue professional bars at the lows there. And is that kind of realizing that 1120 is not going to hold, and people trying to get short before the open on Sunday into Monday. The reading down here is negative 53,000. The reading up here was 81,000. So to stop this move, we need to see that kind of a reading on the downside to show symmetry in terms of this move, and we've not seen that yet. So potentially we're going into a scenario where we might get some fireworks on Monday. Looking at other kind of related charts, interest rates, and I've been banging on about using better sine wave on the interest rate charts. This is 30-year interest rate, and you can use better sine wave to show kind of the swings here. And we've been breaking into a downtrend, have done basically all year, but this last swing down, we're below support, and we're cresting back up to a pullback and a downtrend. With same thing on the 10-year here, below support, kind of cresting back up, and actually on the 5-year we've had that move signal, so pull back in a downtrend. So the interest rates are starting. This week had a little bit of a rally in those interest rates, so we're starting to move down now, another kind of leg down on these daily charts. When you look at it on the monthly charts, now these things are starting to show some cyclical supports kind of due in the next month or two, and I've been saying we'd have this continuation of this downswing until this cyclical move was over. We're down here on the 30-year kind of a almost record lows here, 2.9%, but we've got better sine wave starting to cross Here's the 10-year, same thing. The 5-year a little bit, a couple of months off in terms of a cross there. So, in the next couple of months we will get those kind of lows put in. But what's going to happen in the next few days or few weeks is kind of important. But it's still what I'm saying is those interest rates are going to be moving down. That means money moving into the bonds, which could be as a result of a shift out, a little bit more kind of panic selling in equities and the risk contracts and so on, and into the US dollar and out of currencies. So talking of currencies, so commitment of traders numbers came out on Friday. This is Aussie dollar, and we just had a bearish divergence signal come in on Aussie dollar here. So that's kind of signaled on the weekly chart. Obviously there's not a daily chart here because commitment of traders numbers comes out on a weekly basis, so that's kind of printed there. We're down at 96 on the Aussie dollar hit. I think we went over $1.10 on this last kind of little peak up, so we're down at 96. That's a big move, a 15-cent or 14-cent move in the Aussie dollar in kind of 3 or 4 weeks is fairly significant. We've come right down to the zero line on Aussie dollar. When you look at it on a monthly chart, it's kind of come off. Euros, similar thing. We've had the bearish divergence signal on the weekly chart, and euro was printed quite a fair few weeks ago when we were in this real kind of bounded range. We had been for several months between $1.40 and $1.45 versus US dollar. We got that bearish divergence signal, bang, euro kind of sold off, and we've also got it on the monthly charts as well there. And that's pretty substantial in terms of the reading for the professionals there. And then the flip side is dollar index, and this is again, I've been banging on about this for months. Dollar index seeing strength coming into the dollar index, and we've had a very strong move out of this kind of 75 type range. Commitment of traders all the way down here was starting to show bullish divergence kind of come in. Professionals have stepped into this and got on board. Same thing on the monthly chart. Again, every time we were coming into this 70s, mid-70s kind of reading, we had bullish divergence in this last one. So I'm thinking there's a strong move coming into the continuation. It's been a strong move in dollar index and weakening of all the currencies. So again, that kind of points to strength in dollar, strength in treasuries, which means risk off, and then the risk on trades kind of go down. So more stock market weakness and so on. Let's keep going. Dollar index in terms of the chart. Just the only caveat I'd say on the chart, dollar index in the weekly chart, we're coming back up to a cyclical resistance level on the dollar index. So we'll run out of steam on dollar index, in the next couple of weeks and kind of turn down. But what I'm worried about is the next couple of days. Copper, just to show this on a weekly chart, copper had finally topped out, and it's been a huge down move in copper, and copper is a real kind of forecaster for world economic growth, and we had pullback to end of trend on the weekly chart. We'd had our exhaustion buying into the highs here. The last push up into end of trend was a flush signal, flushing out the last of those buyers, and it's been a real kind of roller coaster move on the downside there. But daily chart, yes, we've had extreme selling at this point, but we've not put in a pullback to end of trend yet on the daily chart, so the downtrend's still in place. We could rally back a little bit, sure, but in terms of that move down, that's still on. Cyclical turn on the weekly chart will come in at some point and kind of catch that, but don't see it quite yet. Crude oil, I suppose, the only kind of fly in the ointment. That you look at the pattern here on the daily chart, we've had its huge kind of sell-off into the 75 area, exhaustion selling. We hit cyclical support here, bounced off there into Rambo patterns, amateur up bars, stopping volume, amateur up bars, bearish divergence, really weak here. Come back down, form this double bottom here. Professionals step back in again, a flush signal, flushing out the last of the bars. So potentially, again, if this is like a little kind of retracement bar back into those lows, just to test, if crude pops above the high of Friday or Thursday and pops into 85, then that would be a strong signal for a rally. But that's the strongest chart that I can find that might have some chance of kind of rallying from here. But we're very close to that cyclical turning point, and if cyclical support level, and if all the other markets decide that they're going to continue on the downside, then that will break, and we'll kind of need to make a pullback to end of trend sequence on this daily time frame. So there we go. Just to kind of recap, we're in this consolidation zone with Friday's activity. The fund managers kept it up as best they could. The S&P ended up, I think it was down 14% for the quarter. and we're just inches away from this kind of lower trend line. And so Sunday night I'm going to be watching really carefully. All we need is just some bad news out of Europe, something, a political kind of type event, and this will kind of give way. So going to be a very interesting week next week, so going to be watching it closely, and again, enjoy your weekend.